Namaskar. You're watching BTTV. This is Market Today. I'm Tanya Aneja, and with me is Shail Bhatnagar, our markets editor. Well, bulls were in action on Dalal Street yesterday, but what's really next and where are the pockets of opportunities? We'll discuss this and much more. But first up, the top headlines for you. Indian stocks are likely to pause on Wednesday as investors digest gains over the past three sessions and look to quarterly earnings to define the trend in the coming days. It's Bank Nifty's weekly expiry day as well. Meanwhile, cash stocks will continue to be in the spotlight as traders look at newer and newer sectors to join the ongoing party on Dalal Street. Fertilizer, tires, PSU banks, metal companies, and energy majors from the public sector are likely to gain fresh ground. Very good morning, Shell. Bulls were in action yesterday. It's a fresh Wednesday morning today. And Nifty was able to cross that 19,800 important mark amid buying across the sectors. And overall, if you see, given the resilient domestic economy and strong earnings outlook, the positive trend remains intact. So I want to understand from you now that what should be the strategy at this point in time and where do you see Nifty?
Good morning, Tanya, and good morning to all our viewers who've joined us from different parts of the globe. It's a fantastic day, at least as far as Delhi is concerned, Tanya. We had a mild shower yesterday. The temperatures dipped further, and it's absolutely clean across the city. I hope this kind of clarity also enters my brains. But it's a bit of a difficult day today. If you remember yesterday, we had talked about a gap up, and beyond the gap up, somewhere like 915, 917, we had mentioned the possibility that the Nifty might flatten sideways and do nothing, and that's exactly what's happened. Now today, after 3 days of gains, you have about 170, 180 point rally on the Nifty, and we are sitting on T-1 for the Nifty as far as the weekly expiry is concerned, as also on the weekly expiry of the Nifty. So today is going to be a consolidating day as far as these two indices are concerned, and the fact that things are not so good as far as the Middle East are concerned. The ground war has started, and before it has started, the news that is coming in is not pretty good, and that's boosting crude oil prices. If you see Brent crude, it's now at $91 a barrel, and that's sort of gaining a lot of ground. So the Nifty was in a trading range yesterday. The low was 19,775 and the high was 19,840. So it's a 25 plus 40, 65 trading range. And let's see if the good point would be that Nifty retains itself above 19,800 between today and tomorrow. If you see the weekly picture as far as the Nifty is concerned, it's up 0.2%. So that's a bit of a relief. But overall, the picture is, as far as the index is concerned, sideways to a consolidating trend today. Although the sentiment as well as the bias is upwards after a 3-day rally. So short covering is seen in the banking space, HDFC, ICICI, SBI, Kotak. Not only that, Reliance also, which is the index heavyweight, is showing signs of short covering. So that will provide a nice support base as far as the Nifty is concerned. 19,700, 19,750 are very, very strong data-led option chain confessed support levels as far as the Nifty is concerned. And if you look at individual stocks, BPCL and Grasim have some of the strongest charts when it comes to Nifty stocks. So these are the small niches, small nuggets that we are seeing within the Nifty space. So it's going to be a consolidative to flat kind of a day as far as the Nifty is concerned. Any dip towards 750 and an intraday pull down to 700, 19,700 is a good opportunity to get back in the rally. The overall theme remains that you are going to see a fresh record high somewhere by end of October towards Diwali. So the uptrend and the upthrust is in place. Today is a resting day for Nifty, and if you look at the resistance, you see 19,900 and 20,000 levels as very, very strong resistant points for the Nifty on the options chart. The good part, Tanya, is that lots of short-term moving average 8, 20, even 34 and 50. These are moving averages which are acting as a support for the Nifty on its way down. So it's a fairly strong chart. It's just that today is a resting day.
Okay, absolutely got that. Today is a resting day for Nifty, and 19,800. That is, an important level to watch out for. But let's talk about Bank Nifty also, Shell. It's weekly expiry today. And Bank Nifty, if you see, it hit a high of 46,310 in September, following which it has been facing, a lot of selling pressure at every rise. So, what are the fresh and fresh support and resistance levels now at this point in time, and where do you see Bank Nifty going forward?
So, yeah, Tanya, today is the weekly expiry, it being Wednesday for the Bank Nifty. So obviously, it's a day of peace and quiet as far as the index is concerned, and then we enter the last leg of the monthly expiry of October, which is slated on October 26th. So with these things in mind, Bank Nifty is likely to be flat. The trend here is not so conducive to bulls. If you look at the broader term charts of the Nifty, of the Bank Nifty, it took support at the 100-day exponential moving average, and a cluster of smaller moving averages are looking to prevent the Bank Nifty from moving upwards. Remember, it ended about 183 points higher at about 44,400. But the fact is that any upthrust is met with a fairly strong resistance when it comes to the Bank Nifty. Yes, we do see short coverings in HDFC Bank, ICICI Bank, SBI, Kotak, but that's more of a support kind of a thing rather than any move towards beating the resistance. So these are the 2 or 3 things that one should look at as far as Bank Nifty is concerned. Flat to sideways, and if you really push me, the options chain shows very strong support at 44,000 and a very strong resistance at 45,000 as far as Bank Nifty is concerned.
Okay, absolutely. So 44,000 and 45,000, these are, important levels. Keep an eye on that. And let's talk about future and options space as well, Shell, because I think lots happening there as well. So what are you looking at in the F&O space today?
Well, Tanya, it was a crisis of plenty when it came to F&O stocks, and I have chosen the ones where you have the least amount of risk, coupled with a very strong sectoral tailwind. So let's first look at Apollo Hospitals. If you look at the longer term chart of Apollo Hospitals, you see the stock having a fairly sharp breakout in yesterday's trade, but the beauty of this chart is that we saw a high of about 440 rupees somewhere in middle of July, and then the stock retraced to 368. It's a fresh move that's begun yesterday, and the gap up was accompanied by a very sharp rise in volume. About 85 lakh shares were traded yesterday, and what you see is a very strong development in open interest, about 21%. And in this background, Tanya, you have to consider a very strong performance given by a smaller rival, CEAT, at a record high, MRF at a record high, JK Tyres at a record high. Except for Apollo, everybody is partying on Dalal Street, and Apollo joined the party yesterday. So any dip that you see as far as Apollo is concerned is an opportunity to get back into a quality stock. Remember, the intraday high yesterday was somewhere like 395, and the stock shut shop at about 390. So a bit of profit booking has happened yesterday. If see any kind of dip towards say Let's look at 385, 382. This is an opportunity to get back into a quality stock. So this is the one that I'm looking at, and a similar kind of performance is seen in Canfin Homes, 4% higher in yesterday's trade, accompanied by a 12% rise in open interest. These are data based on technical parameters as also options data, and should you feel very confident in getting into these stocks positionally, please also take another view of a financial advisor who looks at similar data. Tanya.
Absolutely. So that was FNO data for you. And with that, it's now time to welcome our guest on the show today, Gaurang Shah. He joins us today. He's the Senior VP at Geojit Financial Services. Good morning, Mr. Shah. Always good to have you on our show. It seems like bulls are not really ready to give up anytime soon. So, how are you approaching markets at this point in time?
Well, thank you, and morning to all of you all. We speaking on the markets since a long time, especially over the last couple of weeks, post the situation that developed in the Middle East. And even at last week, if you remember, we were of the view, and it was immediately, I think, after the unfortunate incidents of the terrorist organization Hamas attacking Israel. And our view was that we have seen many such incidents in the past. We've seen the ugly reality of a Chinese virus attacking the entire world. We've also seen the financial meltdown in 2008. We've also seen Iran invading Kuwait, Iraq invading Kuwait, and then US taking reciprocative action. And we have come out of all those situations. So whenever situations like this happens, our view is always that if you're not really worried about the short to medium term, if you're looking at long term, then these are great opportunities to pick up some very strong fundamental investment ideas. Eventually, we will overcome this situation. The big question mark is when and in what form and in what situation. So let's hope that this also will get evolved over a period of time. Also, from the FI side selling activity, we've been able to sustain that. The domestic institutions have been able to withstand the selling pressure from the FIs. And net, if you go and see, if we look at the figures, AMFI figures, I think they give you a very soothing feeling. So let's hope that we have possibly done and dusted with the development that has been happening in the Middle East. I only hope and pray that neighboring countries don't jump into this particular fire that we are finding it difficult to handle. Otherwise, I think we should be riding out of this particular turmoil quite smooth and easy.
Fair point, and there is no doubting the underlying granularity of a bull market as far as India is concerned. All dips are getting purchased into, whether it's at 19,200 or 19,600, and then the index moves upwards. Good morning, Gaurang. What a pleasure to welcome you again on Business Today Television. Tell our viewers and investors, where do you think there is value to be had in this kind of a market? Where can investors buy quality stocks available relatively cheaper based on valuations or sheer price and hold them for the longer term?
So, Shail, financial is something that has kept us excited for a pretty long period of time, and I'm sure on fallback of earnings, financial will be in the spotlight for all the good reasons. And when I say financial, it includes public-private banks, it includes strong NBFCs, and it includes housing finance companies, and more so MFCs, that is microfinance companies. So one such company is Credit Access Grameen. We've been maintaining a positive outlook on this particular stock for a pretty long period of time. And the beauty of microfinance company Shell is that, first of all, the ticket size is very small. And effectively, the run rate of return of principal and interest is almost 90-95%. I think for Credit Access Grameen, it's in excess of 90%. And you have a very decent growth outlook and demand for credit. I think it is going to be very strong in larger cities like metros, tier 2, tier 3 cities. But equally is going to be strong demand for credit from semi-urban and rural India. and that effectively, I think, augurs well for microfinance or small finance companies. Hence, one particular recommendation on the fundamental side from a long-term point of view is Credit Access Grameen. The second one is a name which is very familiar, earlier very familiar up north and now spreading across India, from the consumer durable stroke electronics peripherals and accessories is Havells Limited. I think there was a bonus adjustment some time back. Now it is trading ex bonus. Uh, I stand to be corrected if I'm wrong, Shell, on the bonus front. But very, very strong name. They launched quite a few new products, and that has found tremendous amount of traction in the market amongst the consumers. Has a very decent market share spread across different products and profiles. Uh, Demand from metro tier 2 will be there, but more so from semi-urban and rural India. And I think very strong new order market and equally strong is the repeat order market. In terms of valuation, I think on the earnings front, this looks quite attractive from consumer durable stroke electrical peripherals and appliances. So Havers Limited is the second one.
Fair point, and we've seen Havells really outperform and give multi-bagger returns over a period of 20 years. I have a fantastic story to relate, Gaurang, about Havells, but we'll keep it at a different time. And yes, of course, Credit Access Grameen. The entire microfinance space, as also the NBFC lending space, is, how should I say, clicking with decent gains. Gaurang, yesterday we had a very nice move in Canfin Homes. After a very long period of time, there was this corporate event in terms of a mishap. Beyond that, what? How do fundamentals of Canfin Homes look to you?
So again, as a disclosure, we do have a positive coverage on Canfin Homes, and I think there were two such incidences wherein the employees were involved in some kind of a scam, uh, and then the appropriate action was taken. I think there was a little bit of concern on the transition of who comes in place of the top management. If I'm not mistaken, that was the news also, but now that has been taken care of. Uh, One thing about HFCs, that is home finance company Shell, is that as the real estate market grows, as the sales grow, especially on the residential side, as the demand picks up, as interest rates stay stable, and most probably starting next year, if you see downward move on the interest rate front, uh, all these reflects quite positive on the housing finance companies. Uh, of course, Canfin Home has been in this business for a pretty long period of time. Have seen their been that and done that. They're, like you mentioned, other than that particular overhang now, which is a thing of the past, I don't see any kind of negative kind of unpleasant surprises in form of earnings. Uh, the loan disbursement going up will translate into NIMs improving, and that will again translate into a very finer number as far as net profitability is concerned. So real estate does well, housing finance companies does well.
So that was the verdict on Canfin Homes. But it's the earnings seasons, and shares of Wipro and Bajaj Auto, these will be in focus today as the companies are all set to release their second quarter earnings. My colleague Pawan Nahar is with us now to tell us more about the expectations. Pawan, good morning.
Good morning, Shal. Good morning, Tanya. Blue chips like Wipro, Bajaj Auto, and IndusInd Bank will announce their quarterly earnings for the quarter ended on September 30th. So, let's talk about Wipro first, Tanya. So, the fourth largest IT services player in the country is likely to report a subdued set of numbers in the second quarter, and the sequential revenue is likely to decline and due to deal conversions, slowdown in deal conversions. However, manufacturing vertical may push the profits higher. Operating margins are likely to remain stable because of cost optimization measures taken by the company. Post earnings, management commentary on guidance, future outlook, attrition rate, will be the key things to watch. Talking about numbers, Tanya, Wipro may report a revenue of around 22,780 to 22,930 crores in second quarter, which is likely to be on the flat side on both yearly and sequential basis. Net profit is seen in the range of 2,875 crores to 2,975 crores, which is marginally up on Q1Q basis, but decently up, say, 8 to 12% on a year-on-year comparison. EBITDA margins are seen around 16.9% to 19.2%, with EBITDA at 4,400 to 4,500 crores level. Now, Tanya, talking of Bajaj Auto, another constituent of benchmark indices, will also announce its quarterly earnings today. So the second largest two-wheeler is likely to report an increase in net profit in the period ended on September 30th, despite a fall in sales of overall volumes. Margins are likely to improve on the back of richer product mix, price increases, and raw material tailwinds. So, Tanya, Bajaj Auto is likely to report a standalone revenue of rupees 10,920 crores to 10,950 crores in the second quarter, which is around a growth of 6 to 8% on both year-on-year basis and Y-on-Y basis. Sorry, I mistakenly said Q-on-Q basis. Standalone profit is likely to come around somewhere 1775 crores to 1785 crores, signaling a growth of 16 to around 16% on yearly comparison. And EBITDA is seen around 2100 crores, with the margins likely to improving 200 basis points on a yearly comparison, say coming in the range of 19 to 20%. That's all from my side, Tanya. Over to you.
Okay, absolutely. Thanks for that, Pawan. And now coming to you, Mr. Shah, for HDFC Bank. You know, the stock was one of the top gainers yesterday, and the bank posted better than expected earnings as well. However, brokerages, if you see, they have reduced targets for HDFC Bank on margin worries. So, what are your thoughts?
Well, this margin worry is news which we've possibly done and digested as far as Geojit is concerned, Tanya. And we are maintaining a target of almost in excess of 1,900 plus kind of levels. We have not changed our targets. And more importantly, when two, large cap entities merge into one, for synergies to evolve at ground level and translate into positivities as far as the numbers and balance sheet is concerned, it takes time. I don't think under worst situation also, when I recollect, I think couple of weeks back, some foreign, bright-minded entity had come out with a sell recommendation on HDFC Bank. Concerns were because of margins coming under pressure, etc., etc. But what happened to the stock? Nothing actually. And in fact, post the numbers that we've seen, I think possibly over the next third and the fourth quarter, I don't think you are going to see any kind of disappointment as far as margins are concerned. Large part of it, whatever negative impact or overhang, I think is done and dusted. Slum slipover or slippages might be there in the third quarter, but I don't think fourth quarter and next financial year you'll have to anything to complain about as far as numbers are concerned for HDFC Bank.
Correct. And over a very long period of time, Gaurang has maintained this view that quality stocks with parentage that has given multi-bagger returns need to be purchased once they are in pain, and HDFC Bank fairly ticks all these boxes here. Gaurang, we've seen a very, very sharp rally emanating from the tire space, a fantastic performance coming in from CEAT, lots of breakouts happening in charts. Be that as it may, anything in the tire space that catches your fancy, which hasn't been addressed by the market so far? There seem to be some gains still left on the table.
So undoubtedly, Shail, like, real estate sector does well, that reflects upon the housing finance companies. Auto sector does well, that reflects upon auto ancillary, OEM, and battery manufacturing companies. And tire is something which is one of the most crucial and core integral part of a vehicle, which also, derives the safety standards, if you will. Excuse me. There was a time wherein India was facing Indian tire manufacturing companies rather were facing extreme pressure as far as dumping from Chinese cheap tires were concerned. The government took appropriate steps. Import duty was put in place. Anti-dumping duty was put in place, and that was the end of the story as far as Chinese, substandard tires which were dumped into India. Uh, Apollo Tire is one that you mentioned, I think, or when I just joined into this particular show, and we spoke about Apollo Tires, I think, about a week or a fortnight back as a fundamental recommendation idea. Now, Shell, the only issue is, the boil in the crude oil prices because of the situation. And unfortunately, if Iran also has to jump into this fire, then Iran is the second and the fourth largest producer of crude oil and natural gas. One of the most crucial global supply pipelines is under Iran's control. So if you have any kind of disturbances in this, then the crude oil prices will bump up, which may translate into short to medium term overhang negativity for tire manufacturing companies because it's a core input in terms of raw material, crude oil. Having said that, consistently price hikes getting passed on because of input costs going up is nothing new for tire manufacturing companies. Apollo Tires, Seat, JK Tires, Balkrishna, BKT Tires, very famous for trucks and buses, radial tires. These are some of the names which are positive.
Fair point. Let's look at the initial prices that are there in the pre-open trades, and then we'll address markets once again. For the moment, it's a downtick as far as the Nifty is concerned, about 78 points lower, 19,740. Let's see how this settles down. Immediately, we look at index heavyweights, and for you in front of your screen, you'll see some stocks clicking in. Just a moment, please. I'm just reloading my software. HDFC Bank, 2.5% lower, 1502. This will sort of settle down. Hindustan Unilever, 0.5% lower, 2543. What is Infosys doing? Flat, 1443. Let's look at the quote on Reliance Industries, again flat, 2358. 0.1% higher. TCS is mildly in the green, 3511. We've seen fairly strong moves coming into Bajaj Finserv. This is one of the very good stocks on technical charts, 1% higher, 1674. ONGC, remember, any uptick in crude oil prices is a benefit to this oil explorer. At the moment, 0.7% higher, 187.55. The Nifty is now getting better and better, down just 39 at 19,781. So today's fight will be anywhere between 19,800 and 19,750 as far as the technical charts are concerned. But let's look at the F&O space minus the index heavyweights and look at stocks where you see some kind of traction in terms of gains. Okay, PNB 1.5% higher, 77 is the price tick. National Aluminium 1% higher, 100.50. Remember, I'm talking about very high beta, low ticket sized items where a large chunk of the trading community is absolutely glued to the radar in terms of breakouts and volume action. We've seen Glenmark 0.5% high, 815. I see IOC moving up after a cut in diesel duties, about 1% higher, 92.55. IRCTC 1% higher, 720. We'll shift focus to NSE 500. There's improvement in the Nifty. You will just see a green tick fairly shortly. 19,800 is back with the bulls as far as pre-open trades are concerned. HUDCO, ladies and gentlemen, the government now getting into action. Any sharp upsurge in prices has always met with an offer for sale from the government at a discount to the current market price of by 10 rupees, and exactly that has been adjusted by HUDCO. It's the top loser, 8% lower at 82 rupees as far as the NSE 500 is concerned. Let's look at the gaining list. Again, ITI, just completely ignore it. It's a low float stock, but still up 7%, 340. Let's look at Suzlon, 5% higher, 31 on the tick. IDFC 2.5% higher, 129. So fairly decent opening, and the Nifty is now at 19,803. Let's look at some other views in the market. Akshay Bhagwat, Senior Vice President of Research at JM Financial Services and a very good watcher of technical charts, joins us. Akshay, good morning to you. Any two stocks that look good on the charts, either on the long or the short side?
Good morning, Shailji. Thanks for having me on the show. I still have maintained a bullish view on the index, and the two stocks which I would recommend at the current juncture, the first would be from the pharma space, which is Sun Pharma. So if you look at the technical setup of Sun Pharma, although it's been in a range since the past 1.5 month, clearly there is buying interest which pulls up at 1100, 1120. So I'm expecting 1160 soon. That's possible in the month of October itself, and a strong breakout might be on the cards at 1160. So I would recommend to buy Sun Pharma at the current level of 1136 with a target of 1170 with a stop loss of 1120 as it stands currently. And the second stock which I would recommend would be Indian Hotels. Now, Indian Hotels too, after a breakout a few days back, is slowly forming a base at 400, 410 zone and setting up for a major price move on the upside. So I would recommend to buy Indian Hotel at the current rates with a target price of 445 and a stop loss of 405.
Okay, absolutely. Good morning, Akshay. This is Tanya joining the conversation. We were talking about tire stocks, and we have seen, stocks like CEAT doing really well in yesterday's trading session, and of course, after the second quarter numbers as well. What are your thoughts when it comes to CEAT and any other tire stocks that you like?
Good morning, Tanya. Speaking about CEAT on the technical charts, what I look at is there is a strong base which is clear. It's at 2100, 2110 zone. Yesterday, definitely a very strong gap up opening, but post the gap up openings, we saw a lot of profit booking in this stock. So still the base is intact. It is giving another opportunity to re-enter 2150, which is the level I would look at to re-enter on the buy side on CEAT. I will keep a stop loss below the base, which is at 2080, and target again for the swing highs, which we noted in the opening trades yesterday around 2300. So CEAT definitely looks good, and Apollo Tires in the tire space, since we are talking about the tire space here, that too is trying to come out of its shell. It's been pretty under selling pressure since the last few trading sessions, trying to again regain from the 370 odd levels. So clearly a support base is in place. 370, 380 is roughly the area where it will kind of see buying traction again. So that's your buying zone. Keep a stop loss of 368, a target around 400 in the short term in Apollo Tire. So definitely, as you mentioned, tire space is one space which looks exciting from a trading bet.
Chaliye, let's look at the Nifty again. It's settled in pre-open trades in the green. 19,800 is back with the bulls, and that is how the index has settled. 19,820 in front of you, 44,400. It's a flat move on the bank Nifty. Remember, it's the weekly expiry today, and that's how the picture has settled. Once again, let's look at Nifty 50 and the stocks that have gained ground. Cipla, pre-open settlement is 1185, 1% higher. ONGC 1% higher, 188. Hindalco, Power Grid, Tata Consumer are the stocks that are deep in the green. Akshay, coming to you, any views on Tata Consumer? This is a stock that is consolidating around fresh highs. Any up moves accepted here?
If you look at the entire consumer space, we are very bullish on this space as we head into the festive season, and even we have recommended a basket of consumer stock to our clients at JM Financial. If speaking specifically about Tata Consumer, the chart structure is very strong. Yesterday, it did note some bit of minor profit booking, but I believe this stock is giving you an opportunity to re-enter around 900 odd levels. So I'm bullish on Tata Consumers. I'm targeting around 945 to 950 in the next 15 to 20 trading sessions. That's around Diwali time. So buy around 900, keep a stop loss at 860, target 950. So Tata Consumer is a buy recommendation.
Okay, that's how stocks are getting placed as far as pre-open trades are concerned. Another sector, although this is just a small uptick, is the oil exploring space. Akshay, any views on ONGC given the boil that we are seeing coming to global crude oil prices?
Uh, well, despite the challenges which the oil market is we are noting with crude again and again trying to get up above the 85-90 dollars levels, ONGC somehow has withstood the entire panic in the space. It is trying to regain its lost grounds. 189, 190 was the swing highs which we noted a few trading sessions back. So it's consolidating right now, but the thought is that this consolidation should soon give way in form of a positive price breakout on the upside. So maybe in the next few trading sessions, you might see still a range of 180 or 190 in place. But I would recommend to accumulate ONGC within this range. Your support is very strong at 180, and soon probably the breakout is on cards, which might take the stock on the upside till 215 levels. So accumulate at the current rate with the stop below 180, keep a target of 215 for ONGC is what I would recommend.
Okay, absolutely got that. And what about Bajaj Auto and Wipro also? Akshay, a quick word on these two stocks, because these companies will be posting their second quarter numbers today. So what should be the strategy?
Prior to the result day, if I were to look specifically at the way the options data is positioned in Bajaj Auto, firstly, it is the 5,000 strike in puts, which is gaining a lot of traction in the last couple of days. The broader chart setup is strong, so clearly 4,900 to 5,000 is a very strong base which Bajaj Auto has set up. It's just a matter of time before it takes off the 5,200 mark. So even if you look at the out of the option calls, there is a lot of traction at 5,200 in the call side ahead of the results. So the belief is that the results should be mostly positive or maybe slightly up, but positive is what we look at in Bajaj Auto. We would recommend to buy even on a dip around 4,950 or 5,000 in case the results offer you an opportunity for that. Targets would be 5,300 on the upside. So bullish on Bajaj Auto. And coming to Wipro too on the technical charts, despite the weak numbers in or the weak reactions which we had in most of the IT space post the results, Wipro somehow has a very strong base at 410, 415 mark. The results as far as the options placement goes looks more to be more on the neutral side. It is going to be a non-event looking at the way the option data is positioned. But I don't think Wipro is going below the 400 mark. So 400, 405 would be the levels to re-enter Wipro in case you get Wipro at those levels. Target would be 415 and keep a stop loss of 390 on this trade.
Absolutely. And also, Akshay, since we're talking about IT companies only, so what about Birla Soft? I mean, all-time high is 584, and the stock is already at a fresh 52-week high, currently at 557. That is in the green. 0.6% uptick there on Birla Soft. What do the technical charts suggest for this counter?
Since it is nearing very crucial all-time high levels, which we saw way back in January 22, it is somewhere around, as you rightly mentioned, 560 odd levels. There is a good chance that this stock might see profit booking for the time being. So if you are trading with a short-term view, I would recommend book out your profits once it nears the all-time high levels, because these are levels which are highly prone to profit booking, and these levels are returning almost after a period of 2 years. So profit booking is what would we recommend for trading once it nears the 560 level in Birla Soft.
Okay, coming to you, Mr. Shah now. What are your thoughts, when we talk about this mid-cap IT space and specifically Birlasoft?
Tanya, so I would comment on Birla Soft because we don't have coverage, but mid-cap IT is something that has excited us for a pretty long period of time. And if you actually go to see in terms of earnings, they have done pretty well compared to the large cap IT companies. Secondly, in terms of investment, too, if you go to see, then a decent amount of wealth is created in mid cap IT compared to large cap ITs. So the bias is slightly tilted towards mid cap IT, and I hope this earnings outperformance run rate will maintain itself. And we are also of that belief that some of the mid cap IT companies are capable of becoming mid, large, and large cap IT names. So the coverage that we have stands at Tata LXI, KPIT Tech, Persistent Systems, Mindtree, LTI Mindtree, that is L&T Technologies, Coforge, Science Limited. These are the names in the mid cap IT universe that we remain positive on.
Okay, it's 9:14 now. We'll await the pre-opening ticks that have already come on the screen, and markets are set to open at least in the green if you look at the pre-open space. Of course, in focus would be the earnings from Bajaj Auto as well as Wipro, which are expected during market hours, and a strong traction that's come in many stocks. Okay, a flat opening for Nifty. As expected, 19,810 is the first quote. The Bank Nifty, its weekly expiry today, down 82 in early trades at 44,326. Let's immediately shift focus and look at index heavyweights. Infosys, 0.5% higher in front of me, 1448. Let's look at Reliance. The counter down 0.2%, 2350. How about HDFC Bank? 0.5% lower, 1533. So these are not good ticks when it comes to the Bank Nifty especially. ICICI Bank under pressure, 0.5% lower, 948. Axis Bank in the green, 0.3% higher, 1011. That's how the sheer index weights are moving. Infosys in the green, Axis Bank in the green. In the red are ICICI Bank, HDFC Bank, Reliance. So these are the three stocks which will pull the Nifty lower, and it is now down 15 at 19,800. Let's look at the broader markets and shift focus to the F&O space beyond the index heavyweights. Let's look at top gainers. Okay, India Cement up 1.7%, 224. PNB taking it away 1% higher, 76.55. We discussed L&T Housing Finance yesterday, 1% higher, 140.40. National Aluminium, 1% higher. Remember, these are all low ticket sized, super high beta counters which attract a lot of traders in front of us. Immediately we'll shift focus to the PSU pack. Chennai Petro, 3% higher, 604. You have a strong gain coming into ITI and Kudremukh Oil. Will avoid both these stocks. NBCC is looking 3% higher, 67. A nice uptick on Masgao Docks. Remember, it's won an order from the government, 3% higher, 22.18. And of course, the other Garden Reach shipbuilders and Cochin shipbuilders are also in the green. Let's look at another set of high beta counters and talk about Tejas Networks. 1.5% higher, 890. Lemon Tree 1% higher, 123.45. So this is how the markets are moving. Let's look at the top gainers in the NSE 500 space to give you an idea on how the money is moving in. I'll avoid all PSUs because I've taken the names many times. Karur Vyasa Bank, 4% higher, 150. We have Tata LXC, 2% higher, 7,600. Triveni, 1.5% higher, 390. This is how the market is moving at the moment. Our first question to Akshay. The Nifty down 30 points at 19,781. Remember, these are early trades. The first support is at 19,775. Let's see if it bounces from there. Akshay, your first comments on how the market has opened. What looks good to you?
Firstly, about the market, if it is about day trading, then 19,800 to 850 zone would hold special relevance. That's for today and tomorrow. The reason being, a lot of call writing bets are positioned at 19,800. And secondly, there is some sort of resistance which we are noting on the charts since the last couple of trading sessions at 19,800. So the first point, if you were to buy for day trading, is either 19,840, 45, which was the prior high point, should be taken off by the market. That would be the first signal that the momentum would pick. As you rightly said, the first support is where we are nearing for, which is yesterday's low, and that would hold special relevance in the next half an hour as to how the Nifty would play out at 19,750 odd levels, because it's the low point of yesterday's. And in case that support breaks, then you might have some bit of weakness in the index for today's session. So 19,750 is what we will be closely monitoring in the next half an hour as we head for the day. The opening has been very soft. As I understand, Reliance and HDFC Bank and some blue chip companies are not supportive of Nifty as of now. 19,700 strikes in puts is specifically drawing a lot of open interest change as of yesterday and even in the opening trades. So it will be interesting to see how 19,750 plays out, and accordingly, if it breaks, we will take a sell call for today. If it holds and sustains above 19,800, then we will preempt a breakout above 19,850 and start buying with a stop loss of 19,750. To sum it up, 750 is a pivot level. Let's see how it plays it out for the day trading, and accordingly in the next half an hour we can decide which way the market should go.
Okay, there isn't much traction coming in index heavyweights, but let's spread our game, and let's look at stocks which in the FNO space are doing good. Please allow me some time. Hindalco, it's the top gainer on the Nifty, 1.5% higher, 492. PNB taking it away, 1% higher. I have JK Cement 1% higher, but it's a very, very high cost, high ticket size, so we'll avoid it. Havels, wonderful. This is two things I wanted to mention. One, that fairly shortly, our friend Gorang mentioned Havels as one of his buys, and surprisingly, it's opened gap down. But the interesting part in FNO is that this is the second most active traded counter, the first one being Bajaj Finance. Earnings as far as Bajaj Finance are concerned. Let's look at Akshay's view on Bajaj Finance. What are the support levels for this stock where you would freshly enter Akshay on the long side?
In Bajaj Finance, a few trading sessions back on the technical charts, we had a breakout at 8,000, which was the all-time high levels. And currently, the result action has been muted, as I understand right now. 7,963 is where we trade. So there will be two buying points which I would be look at. One is if it manages to cross the day's high, that is around 8,100 roughly is the first buy point. In case some profit booking ensures today, then I would look to buy at 7,850. So 7,900, 7,850 would be one of the most crucial level for Bajaj Finance if you are placing a trading bet. The broader view is still positive. It is only if 7,850 breaks, you might have a small round of profit booking for short-term trading, which we do not anticipate as of now since we are trading above those levels. So I'll be looking to buy Bajaj Finance from a trading perspective, as I gave you the two levels. One is a slight dip of 50, 100 points from where we are, or it shows some strength. So as the levels, we need to trade Bajaj Finance. On the upside, 8,250 to 8,300 is where I would target, and the momentum would further continue in case we see that breakout. So Bajaj Finance is a buy. Trade as per levels is what I would recommend going by the current scenario.
Okay, absolutely got that. And metal space, that is one space that is buzzing in today's trading session. Look at Hindalco, Nalco, Jindal Steel, all up in the trade today, trading in the green. Coming to you, Mr. Shah, when we talk about metal stocks, experts say that it's a cyclical sector. And, that's why some of the action that we are seeing in today's trading session, or maybe, from the past few trading sessions. But what are your thoughts and any picks that you like from this particular space?
Coverage on four names: JSW Steel, Tata Steel, Hindalco, and Vedanta. Historically speaking, when you compare it even with the large cap and with the indices that is Sensex and Nifty, metals have not done really much. And in some cases, they have been sideways to underperformers. Uh, News flow from China and, of course, the ferrous, non-ferrous prices in the commodity markets has its own reaction on which direction does the stocks move. Uh, Maybe on earnings front, it may take a while for a meaningful recovery to come back. With respect to input costs, last financial year was relatively higher. That's why we saw margins come under pressure. This financial year, the situation is a little bit better. Hope that it gets better going forward from here on, and you have a better story to tell. In effective, what I'm trying to say, Tanya, is that if you do decide to get invested in metal sector or these four names that I've mentioned, you need to have at least 1.5, 2 years plus kind of a time horizon for a meaningful recovery in earnings and that translating into stock prices.
Okay, absolutely. Got that. And coming to you, Akshay, now for these metal stocks and specifically Nalco, if you see, it's the top gainer from the metal pack, up 2%, strong open interest change. And there is this, long buildup that is happening in options and futures for Nalco. So, what are your thoughts and what are the important levels to watch out for?
Definitely, metal space is one space to keep an eye on if you are keen on the buying side. This space has done exceptionally well in the last couple of months. As you rightly mentioned, Nalco, if you look at one of the top picks, has seen strong buying interest right from the opening trades. The entire metals pack is performing well. So, as far as the levels go, what I see in Nalco is the image recent swing high of 105. So that's where mostly the stock is heading for. We saw these levels way back in September 4th. That's a month back. So 105, 106 would be a temporary stopover target for Nalco. The broader chart structure is still strong. It is just a temporary stopover which I'm talking about. Otherwise, slightly with a medium term perspective, if you were to give 1.5 to 2 months time frame, 120, 125 is where we are heading for. 90 is your support base, and I would recommend stay invested or continue to be on the buy side for trading in the metal space or Nalco as we speak of.
Okay, let's look at the broader markets, Tanya. We are at about 926. The Nifty is still down about 19 points, 19,793. Remember, the first test of yesterday's low has happened, and it's the bulls that have emerged victorious. We'll keep an eye out on there. But in the broader markets, you see fairly strong traction favoring the bulls. 1200 gainers on the National Stock Exchange compared with just 600 that have lost ground. So 2:1 kind of an advanced decline ratio. Let's immediately shift focus to NSE 500. The ratio here is 300 is to 200, so 3:2 advanced decline ratio, again favoring the bulls. And in terms of the indices, we have an even Stevens kind of a philosophy. We track about 19, half of them are in the green, half of them in the red. Taking it away is the metal space, as Tanya pointed out, 1% higher. And I think it's also going to be a pharma day. Lots of very, very strong gains coming into stocks like IPCA, stocks like Sun Pharma, as our friend Akshay mentioned, and it's Cipla that's taking it away, 1.5% higher. Strong uptick in open interest, 1.7% higher. Akshay, coming to you, Cipla, what are the charts telling you? Long build up on the charts.
Yeah, definitely, Shailji. Cipla long built up on the charts. Post setting up a base at 1160, the stock is now picking up momentum into today's trade. So the consolidation which we have noted in the last few trading sessions is finally giving away, and the stock is possibly heading for 1240 on the upside. So it's a nicely positioned for a trading buy. Even the longer term charts suggest that there is strength in the counter. It is just for the short term that you had the stock getting into into its shell, but I believe it will be soon the pharma pack would be trying to reverse and stage strong gains. So Cipla are the levels which you need to keep a tab on if you are trading. 1215 is your first target area, 1240 would be your second target area, 1160 is the base which is setting up. The view is positive, and 1240 should be your target if you are positioned for 15 to 20 days in Cipla.
Okay, another stock that I'd like to mention, which is on a rampage as far as bulls are concerned, is Ipca Labs. This is the fifth day of gains, so you need to be very cautious on the long side. 977 in front of me, and if you look at the monthly chart, this is the highest level since September of 2022. So that would make it a 14-month high on Ipca. Okay, let's shift focus and look at stocks apart from the pharma space and the metal space. I think, Tanya, it's Tata Motors that's resuming its upward journey, and we'll get both Gaurang and Akshay into this conversation. Akshay, to you first. We caught this somewhere like 6:30, and then the rally has been fantastic. What are the charts telling you on Tata Motors after a 2-day dip?
Tata Motors chart structure is absolutely fantastic. It's a very strong bullish pattern breakout, which we noted a couple of trading sessions back. In fact, the sluggish trading activity which we had in the last couple of days is giving us a good opportunity to re-enter this stock since back again we retested the 650, 655 levels, and from that point we are witnessing again fresh buying action in the opening hours of trade. So broadly, if I were to look at a slightly medium-term perspective, then 700, 720 is where the stock should be heading for. It's a very strong chart structure, which I see. The base is set up at around 625 to 630. Keep bigger targets in Tata Motors because there is ample space to go still in this stock. Stop loss would be 615 and 720 is where I would look at Tata Motors in 1 to 1.5 months from here.
Now, Mr. Shah, for Tata Motors, the stock is actually trading near its 52-week high. What would be your advice?
Highs are yet to be seen. That's what I would say, to be very honest. And the new Harrier and Safari, especially the new Harrier, is a showstopper. I think it's a howler of a new avatar that we are going to witness, including the Safari. Nexon, undisputed king in its own segment, and of course in the relatively affordable compact SUV, Punch is really punching it out quite well. GLR business, which was a concern, is now started to do well in terms of earnings and contribution to the balance sheet. And lastly, but not the least, the commercial vehicle segment is also seeing a fine traction. I think the story is just developing. I wouldn't be surprised, Tanya, if you see a lot of re-rating and price targets getting revised upwards. And if what the management has said, and if it is guided appropriately, and if they succeed sooner or later in making the balance sheet debt light or debt zero, then I think you have a wonderful story and a smooth ride in front of you in form of Tata Motors.
Okay, absolutely. And let's pull up, Orient Cement stock as well. The stock is buzzing in today's trading session. It is up around 8% as we speak. And there are reports that suggest that CK Birla has approached Gautam Adani for stake sale. So, coming to you, Akshay, first for a quick technical check on Orient Cement.
Orient Cement, as it is placed right now, I believe it's on the news which you just disclosed. There is a strong gap up. The momentum has picked up. A slight resistance which I see at 205, 207 area, because from these levels last time, from 4th of September to speak, we did see a correction till 165, 170. So some bit of profit booking is likely. At the current rate, if you were to target a fresh buy trade on this, let it sustain about 208, then that would be a fresh breakout or a fresh buy trade for you. Overall, the chart structure is definitely strong. 225, 230 is where we are heading for. It is just a matter of timing. So I would say wait either for the stock prices to settle about 208. If they don't settle, then possibly 190, 195, a dip which you might get in the next couple of trading sessions is where you re-enter. The trade should be on the buy side. Stop loss will be 175. 225 should be your target. Give it a time of 15 or trading sessions for the target to be achieved.
Okay, absolutely. And what about you, Mr. Shah, on this Orient Cement specifically, and any picks that you like from cement space?
We don't track that particular stock, Tanya, but like we spoke about mid cap IT. I think we have a similar story to tell in terms of mid cap cement. Undoubtedly, your large cap names will definitely create value for you. Ultratech, ACC, Ambuja, Grasim. But I think mid cap cement companies is also something that you need to keep your eyes focused on. And over there, you have likes of Ramco Cement, JK Lakshmi Cement, Sagar Cement, Birla Corp, Dalmia Bharat, Shree Cement. Consumption is likely to go up. The only problem, Tanya, is that 5 state elections, by the time we say goodbye to the year 2023, and next year you have a big election. So, because of code of conduct coming in place, some of the projects which were expected to take off may go in for a pause and take off post we have clarity on state and the big election. But recovery in real estate sector, private capex will keep the consumption going up, and the number of bags getting dispatched at reach a higher level. There is also a view that the recent price hike is not the last. Possibly in the future, we will see price hikes with respect to cement bags. And over here also, the input cost was a concern, but now that has become a thing of the past.
Okay, just a couple of statistics on Orient Cement. I remember ever since the acquisition of ACC and Ambuja Cement, the second and the third largest players in the cement space, happened within the Adani Group, by the Adani Group, there has been a buzz in the market that a lot of transactions will happen in the mid-cap cement space that will get used to mergers and acquisitions. And coming to Orient Cement, the all-time high for this counter is 231, something that you saw in 16th of October. So it's a 7-year high that the stock is approaching, and given the news potential and the volume that you see today, already 29 lakh shares are traded, which is the highest since August. We see this move coming in. The Nifty reclaiming 19,800 as far as bulls are concerned, and the test for 19,775, which was the low of the previous day, has happened. Let's see how this goes, and then we'll take the conversation forward. Maruti is clicking in, day's high 10,768. Wipro in the green ahead of results, 414.55. ITC, Tata Motors and Eicher Motors also at day's high, and that's the reason why the index is up. Of course, two more stocks, Reliance Industries 2364 and TCS are the counters that are clicking fairly in the green. Let me just give you the points change that has happened as far as these stocks are concerned. The highest contribution change on the positive side is coming in from Reliance, 7 points, Infosys 7 points, TCS 3 points, and Hindalco about 3 points. I'm rounding these numbers off for you. And in terms of negativity, HDFC Bank is pulling the index lower by 18 points. L&T might free at about 8 points and ICICI Bank about 5 points. Let's see how this pans out. But for the moment, somewhere like 937, we have a fairly strong traction as far as bulls are concerned. The intraday dip at the moment seems to be purchased. What else is clicking in terms of price action? Akshay, to you, ITC days high and at about 455. It seems to be that a very long consolidation phase that started in the end part of July seems to be coming to end. Akshay, your view on the medium term charts of ITC?
Well, Shailji, if I were to look at the medium-term charts or the weekly charts on ITC, as we currently trade, we are trading at a resistance of 455 to 458. So if you look at the charts, this is the upper end of the band in which ITC has been trading for the past 7 to 8 weeks. Clearly, a range has been set. 440 on the lower end is your base, and 455, 458 is the upper end of the base. So it is a matter of time as to how and when the breakout would play out, whether it would happen today, tomorrow, or in the short term. But we are positive that this breakout should be soon on the cards. If this breakout stages, then 475, 480 is where the stock should be heading for. So in a consolidation right now, trying to break out, maybe it might take its time, but definitely the data pointers which are working out in this range are suggestive that the breakout may be soon on the cards. So keep a stop loss below 440. Keep targets of 475 to 480. Probably by the festival season, you will see the targets being achieved in ITC.
Gentlemen, it's going to be FMCG day tomorrow. We have ITC, we have Nestle, and we also have HUL. So, Mr. Shah, coming to you, what are your thoughts on these stocks, ITC, Nestle, and HUL, and any picks that you like from FMCG space?
Tanya, India was, is, and will remain a consumption-driven economy, and there is no doubt about that particular fact. Along with that, you have a very strong population percentage with respect to sub 30 and sub 28 years of age, almost 35% of the total population. Affordability is now becoming a reality, not only in larger cities, but semi-urban and rural India. And that is where you see volume growth getting support from semi-urban and rural India. Income levels going up in this geography in India is translated into positivity as far as the FMCG sector is concerned. For the three names that you mentioned, Nestle, ITC, and HUL has always figured in our list, and I recollect very well. There was a time when 180, 200 was a level which ITC found extremely difficult to cross over, and it lost its breath. The moment that took off, the result was 260, 300 kind of levels. And then from there, you saw almost 500 levels before it started consolidating at between 425 and 450. So we remain positive on these three names. Other than this, we have coverage on Colgate, we have coverage on Britannia, Tata Consumer, Godrej Consumer, Dabur, Marico, Emami. And our sense is that if inflation doesn't have to play a spoil sport, which it looks like it will not, then discretionary spend amongst all the classes will be at a very comfortable level. So that will translate positivity as far as FMCG sector is concerned.
Absolutely, Mr. Shah, and even I also remember, people used to troll ITC and that too so brutally. I think waqt ki baat hai. So coming to you, Akshay, you spoke about ITC, but what about Nestle and HUL?
Firstly, consumption story is there, as you rightly pointed out, and Nestle. If you were to look at the chart levels here, again a very strong chart structure here. It is just a matter of time that 23, 400, 500, which is sort of a short resistance in the stock will be taken off. The longer term charts, medium term charts, all are very strong. 22,000 is the base which this stock has already set up. So I'm bullish on Nestle. Possibly 25,000 is where they should be heading to for soon, maybe by the festival time. So buy recommendation would continue in Nestle. And moving on to HUL, which I've been recommending on your shows, prior shows also I've recommended multiple times about Hindustan Unilever. The stock is trying to get out of its shell. It is staging a strong momentum uptick from its support of 24, 50, 60 odd levels, and 2700 should be on the cards. Probably give it around 1.5 to 2 months. Your target area of 2700 would be achieved. The base of 2480 has been set up. So HUL2 would qualify as a very strong buy in the FMCG space, and 2700 is where you should be looking for in HUL.
Okay, the chart of the day, of course, belongs to ITC. Remember, we started this conversation at 4:52, and within a span of about 7-8 minutes, the stocks surged to 457.30. This is what you should be looking at. And as far as the index is concerned, we seem to be heading towards an intraday high after yesterday's low has been tested. So 19,800 option trade seems to be working perfectly. The last time I saw the price was about 115 on the Nifty 19,800 call for October 26th. At the moment trading at about 126. Fairly strong moves coming in from ITC, Reliance, TCS in terms of index heavyweights, and a whole host of stocks helping the Nifty. Bajaj Auto, Coal India, HDFC Life, Divi's Lab, all of them are at days high, and this is how traction is coming in the long side as far as the Nifty is concerned. The day's low being 19,775, and at the moment inching towards what was the opening uptick of 19,825. Let's see how it works. But fairly strong traction coming in on the Nifty on T-1. The Bank Nifty is flat 44, 331, minus 78 as far as prices are concerned. Tanya, what are you looking at?
I think, Shail, let's discuss some of the PSU counters. They have been on a roll. And coming to you, Akshay, for that, any picks that you have from the PSU pack? Because we have seen, stellar rally coming in when it comes to, of course, selective PSU stocks. So any picks that you would like to recommend?
Yeah, PSU's the overall space has been overstretched. A lot of profit booking is evident in most of the PSU names. One stock which clearly stands out is Canara Bank. Here, the chart structure is suggestive that the base of 360, 365 is intact. A lot of buying interest is where we see at the support zones. Possibly 385, 390 is where what would be your immediate target. The chart structure is very strong. Possibly 410 is where we are heading for in the next 15 to 20 trading sessions. So out of the entire PSU space, Canara Bank would be my preferred pick here because the chart structure is strong, the derivatives data supports it. So advise buying Canara Bank at the current rates.
Okay, so these are the picks coming in. And on that note, thank you so much, Akshay, for taking the time out and being with us here on Business Today Television.
Thank you so much.
Okay, coming back to you, Shail, now for a quick market wrap for us. Any stocks that are on your radar from today's trading session?
Well, Tanya, we seem to have caught ITC at absolutely the right time for our viewers. And the fact that you see this traction coming in ahead of earnings is a pretty good indicator of how things are moving. I think it's going to be Reliance's day today. And if it's Reliance's day, that also means that the Nifty will be in a fairly fine shape when it comes to prices. Reliance at the moment is ticking away merrily at about 2634, 2364. The counter is showing pretty strong gains, and a lot of small block deals happening at current prices. I see 11,700 shares traded at this price. Before that, 5,000, then 8,000, 5,600, 5,000, 4,800. Fairly strong moves coming in on Reliance at the moment. This is a beaten down stock. The most recent high that we saw was somewhere like 2650, 2625. This was somewhere in the month of July, and from then on there seems to be a dip that's coming in. That's how prices are at the moment as far as stock prices are concerned. But let's discuss in our corporate radar space. Fairly strong earnings coming in from a recently listed stock, Cyient DLM, and it's the CFO, Mr. Srinivas Kulkarni, who's joining us. Good morning, Mr. Kulkarni. What a pleasure to host you on Business Today Television, and a fantastic set of numbers that the market is celebrating. You've recently listed less than a year ago, and the stock has already given multi-bagger returns up about 2.5%. Please share with us, with our viewers, where do you think that the company is headed in terms of guidance for at least the top line, and if also you can share how profit is likely to move, sir.
Good morning, and thank you for having me on your show. We had a strong growth quarter. I think this was expected. We have strong order book right now, right, and that's converting into revenue. So our order book at the end of previous year was almost 3 times the revenue, which is very unusual in this space to have that sort of an order book. And these are confirmed orders from very marquee clients, right, and which we are now executing to. So the outlook looks great. The demand is very robust. Our aerospace and defense sector is growing very impressively. We also have focus on industrial and medical, but they are growing at a lesser pace at this point in time. Margins, look, we are at the still a young company in a sense that there is a lot of investment that we need to do in supply chain, in sales, go-to-market initiatives, etc. So we will probably operate a little bit below what our real potential is, and very consciously so to cater for the growth that we expect in the future.
Fair point. Just a couple of words on what Cyient does. It's one of the largest electronic manufacturing services provider in India, and they primarily make printed circuit board assemblies. About 63% of last year's revenue came from the PCB segment, box builds, where 32% of the revenue came in, and it comes from making cable harnesses and offering other manufacturing solutions. It's a very high profitable business as far as the company is concerned. If you look at the 3-year average ROE and ROCE, they are respectively at about 43% and 14.2% respectively. The IPO was met with a fabulous demand, and this was at a price of about 260 rupees, if I'm not wrong. Yes, 265 rupees, and it got listed in June of 2023. From there on, it's been a one-way story at about 720. Mr. Kulkarni, these must be wonderful times to for the company to discuss how your stock has performed. Very strong expectations from Dalal Street as far as the company is concerned. Tell us about the relationships that you share with your clients. Any new clients that you seem to have signed in, or what are the discussions from existing clients as far as fresh business is concerned?
Like you rightly pointed out, the IPO has been a very grand success. It's not just for Cyient DLM, but for other companies in the EMS space. I think EMS as a sector itself, I think it's a booming sector in India right now. I think there's a lot of focus, especially after COVID. I think when the whole world is looking to sort of diversify the manufacturing base, I think India is in a very good sweet spot to take advantage of all of that traction coming towards us, right? Look, we have marquee clients. I think one of the differentiators for us is compared to some of the other EMS players are our logos are some of the who's who of this industry. Like we have, Bharat Electronics, we have Honeywell, we have Thales, we have Rafael. ABB, etc. Right? These are the sort of marquee clients we have, and the advantage of working with the clients like these are they heavily invest in you in terms of making sure that the quality norms, etc. That the output comes out from these factories are to their satisfaction, and therefore it's a long-term relationship. I think most of the contracts that we get, right, are like 10 years, sometimes as high as that. So yeah, I mean, we are in a good spot. I think we have to sort of execute to the order book right now, as well as sort of focus on growing that order book with the new opportunities that we see in this space.
Okay, absolutely got that. Good morning, Mr. Kulkarni. And let's talk about the margins, because EBITDA margins, if you see on a Y-o-Y basis, the margins have dropped due to one-off PPV gains in FY23 and adverse revenue mix in the second quarter. So, what's your outlook when it comes to margins going forward, and what's the guidance there?
So we operated last year, and our EBITDA was at 10.6%, and our expectation is that we operate in the same range. Of course, with growth, we will also have higher margins coming in because of better absorption. But what we are doing right now is also heavily investing back into the business to sort of take care of the next phase of growth, right? And therefore, we don't have an official guidance for the full year, but what we have is our internal aspiration to come back to a double-digit margin this year, right? And that's where we would like to operate. Now, having said that, I will also say another thing. This is a function of many decisions, right? 1/3 of our business today is low margin, and 2/3 of our business is high margin. So as the mix changes within a quarter, the margin tends to look a little lower compared to maybe a previous period at the same time, right? Also, this is a business where we have to weigh in the sort of decision between a ROCE versus a margin. Tomorrow there could be a big order that will come in which has lower margins, but it's probably great on the working capital, and it still makes a lot of business sense to take on that order. So it's hard to predict where the margin trajectory will be, but with the current order book what we have, we will be at a low double-digit sort of margin.
Right. Mr. Kulkarni, when the IPO funding was raised of about 590 crores, the principal purposes for the issue were to repay debt and, of course, look at acquisitions to fund future growth. Coming to your debt, is somewhere like 315 crore rupees on the balance sheet. What has been the progress so far in reducing this, and any acquisitions, at least on your radar, if you are talking to some companies? If you could throw some light there.
IPO was for 700 crores, just to clarify. And you're right, the primary intent of the IPO was a threefold. One was to sort of repay the debt. We have repaid the external debt. There is also debt from the parent company, and we will pay that as per the schedule agreed. There is no pressure to pay back that money right now. A large part of the IPO proceeds was going into funding the working capital. Now, with this growth, there's a huge demand to sort of invest into the working capital of the company. And then there was some amount set aside for M&A and general corporate purposes. Now, on M&A, we are having several conversations. Nothing is in an advanced stage, so it's very hard to predict when that will convert. But we are quite focused. Our themes of M&A are to sort of expand our footprint in manufacturing in the geos, right? We don't have a presence outside of India at this point, and for the sort of clients we work with, they usually prefer proximity to their manufacturing units. So that's one area. We also are looking at expanding the capabilities in terms of maybe the cable harness, for example. It's only less than 10% of our business today, but I think there's a lot we can do there if we expand into that space. So there are several things running on the M&A, and we have good traction in terms of looking at companies, but we have not reached any advanced stage at this point in time where I can share further details.
Okay, absolutely, Mr. Kulkarni. And, let's talk about your order backlog as well. You have mentioned in your investor presentation that the order backlog is lower due to impact of seasonal orders expected in the second half of this year. So if you could touch upon that and tell us more about the order backlog. Mr. Kulkarni, can you hear us?
I can't hear. I think the screen sort of froze. Sorry.
Please go ahead.
Yeah, the order book has reduced a little bit this quarter. This is also because of the record revenue that we've had in Q2. The pace of the pipeline converting into order intake is slower than what we had expected. But there is a bit of seasonality in aerospace and defense. Typically, the orders come in the second half of the year more than the first half. So it's a point in time thing. We are very confident looking at our pipeline that our order book will continue to grow through the rest of the year.
That's a fairly good estimate as far as order books are concerned. Mr. Kulkarni, the other point that I wanted to ask was in terms of future expansion, are you looking to raise funds to sort of fund that acquisition, fund that expansion? And what is the pipeline in terms of capacity utilization at the moment?
I'll answer the second part first. Our capacity utilization is currently at around 40%, right? So we have a fair bit of runway to go before there is a need to further put machinery or a new factory. As far as fundraise goes, I think we've just concluded an IPO, right? And therefore, there is enough funds right now to sort of go through the current set of requirements we have. The only way we can think of an additional fundraise is only if there's an extremely large target which we can't fund ourselves from the IPO perspective, right? So at this point, no, there is no plans of fundraise. I think we are well covered, at least for the next 2 to 3 years. And we will take a call at that point in time, but we will not hesitate to tap the market if required, in case there is a large requirement.
Mr. Kulkarni, if you're operating at 40% capacity utilization, then and your sales have grown dramatically from 170 to 292 crores, profit has almost doubled to 1400 crores. That's a phenomenal performance, but why is capacity utilization just at 40%?
Invested ahead of time, Mr. Bhatnagar. I think we invested in a new factory in Hyderabad just at the beginning of COVID, right? So that has taken a little time to sort of fill up. So that's another lever we have in terms of as we improve our capacity utilization, and these are machining capacity. The real estate capacity is even bigger than this. This will further add to the margins in terms of better absorption of the manufacturing and factory overheads. Yeah, so we have invested a little ahead of time, but quite honestly, the 40% at current levels means by in a couple of years we would have consumed the capacity at an optimal level. We can never reach 100% in this industry. There will always be some residual capacity that is left out. But yeah, I mean, we have invested ahead of time. At least we don't have to worry about building a next factory before funding the growth, right?
Okay, absolutely, Mr. Kulkarni, got that. And on that wonderful note, thank you so much for taking the time out and being with us here on Business Today Television. And of course, all the very best for the coming quarters as well.
Thank you so much. Thank you very much.
Coming back to you, Shail, now for a quick market wrap before we wrap up, this edition of Market Today.
Okay, Tanya, as far as Nifty is concerned, it's now in the green, 5 points higher at about 19,817. And the stocks that are contributing to this fairly sharp uptick are, of course, today Reliance contributing 10 points, Infosys contributing 8 points, ITC taking it away 4 points higher, Cipla and TCS in the green. So a fairly strong traction coming in. I had mentioned the 19,800 call at about 115 rupees, and I'd just like to review the price. At the moment, the call is trading at about 125 rupees. This is, of course, the October 26th call. Very nice move coming in as far as the Nifty is concerned. It's tested yesterday's low, which was 19,775. And from then on, it's now looking to break the opening high of the show, which was at about 19,825. If it goes beyond that, then, of course, we are going to see a fairly strong uptick coming in. Remember, it's T1. T-1 for the Nifty. And as far as the Bank Nifty is concerned, on its weekly expiry day, the index is still down 121 points, 44 to 90. Tanya.
Okay, that was a quick market wrap for you from Shail. And on that wonderful note, thank you so much, Shail, as always, for being with us here on Business Today Television. So with that, it's a wrap, but don't go anywhere. Lots more coming up for you. Stay tuned.